All right, hello everyone. Feeling a little sick today, but we'll get through this. So I'm going to try to do a back test with you on my third strategy in the series, the ES strategy. And what we'll cover is our strategy, what I trade, why I trade entries and exits, and then we'll cover risk management, which is always going to be 1.5 to 1 reward to risk. We'll cover the number of trades per day, which are one trade per day, but occasionally we'll take two trades if I take a loss and the market looks hot. So the market's trending in a direction, so I might take another trade. And we'll cover fundamental analysis in a few minutes, and then we'll cover what days do I trade. I don't trade FOMC. I don't trade half days. However, this strategy being a 1.5 to 1, I might choose the best possible days to trade. So days that are choppy or open choppy, I might not want to trade those days. So break evens, I do not use break evens. Stop losses, we'll cover stop losses in a second, and indicators and everything. So this is an orb strategy, and we'll start in a minute. Okay. So what I'm using in terms of corroborating assets, or an asset to give me an idea on what to trade, is Microsoft and Nvidia. And why do I use Microsoft and Nvidia? Well, I use Microsoft and Nvidia for NASDAQ, and I found this translates well for ES. And why do I use it for NASDAQ? It's because these are highly weighted stocks on the NASDAQ. So in the top 10, top 5, Microsoft and Nvidia, and I found that the signals that I would get from Microsoft and Nvidia translated well for trades on NASDAQ. I just found that translates well as well on ES, and ES being a little bit easier instrument to trade, we're sticking with this. We're sticking with ES. All right, so the VWAP that I'm using is only there to tell me what day it is. So I'm just using VWAP to tell me, hey, we're on this day and versus this day. And the indicator that I'm using really is going to be this one. It's a volume spike indicator. Right here, volume spike, unbound is a creator. And I will use the traditional 5 EMA length, but I'll use a 1.3. So I'm not quite sure what the standard is. I'll use a 1.3. Why am I using a 1.3? Because I don't want it to be too high that I don't get any signals, and I want it to be too low where the signals are bad. So 1.3 is kind of a happy middle. And I do use 1.5 or 1.6 on other strategies, but I'm using 1.3 here because I want to signal early in the day. I don't want to signal at 1 o'clock. I want to signal between 10 and 12. Hopefully, and between 10 and 12 is kind of ideal. And I'm not looking to take trades off the open, so I'm not looking to take trades when the volatility is too high, 9:30 to 10. So I'm looking to take trades after 10 a.m. So, all right, and I'll put alerts on these. So there's alerts placed on these, and it's easy to place alerts. So. All right, so we're going to look for trades after 10 a.m. So maybe I should write that down. All right, and we'll begin with the first day. And as I use on other strategies, hopefully I've talked about them, is points delta, the points accumulated, gained, or lost in a given trading strategy. Very important metric for the way I trade. So it lets me know in a back test whether this is a good system or a bad system quite easily. Yeah. All right. So our first signal here is at 1057. So 1057, we get a signal here. And this is a very traditional orb or box strategy. So we're going to take 1057, and we'll wait 9 minutes. We'll wait for 3 consecutive candles. to form. We'll create a box. We'll see an open, or sorry, we'll see a close outside that box, and then we'll take a trade. All right, so 7.25 is the risk on this. So PD equals 11 and win 1, losses are 0. All right. Move on to the next day. So this is October 7th. And so October 7th here, the first candle is here. It's at 11 a.m. So we look, it's 11 a.m. So we're looking at this. Now I might just take the first candle if the first candle is very large, or the first two candles if the first two candles are very large. Very large meaning not 12 points, but at least 20 points. So we do get around 20 points here. And I would take a trade here at the close outside the box. And so the close outside the box doesn't move, at least the move app following the entry isn't quite ideal. So at 3 p.m., which is typically where I hold my trades up to, is essentially break even. So we have essentially a break even day here. So we're not going to count this. All right, so we're moving on to the next day. So the next day is October 8th. All right, October 8th, 11:06 a.m. is going to be our first entry. So here we have 11:06 a.m. and then we get a very large close. So let's go through this again. So we have one candle here, one 3-minute candle here, then the second 3-minute candle, and third 3-minute candle. That forms our box. The market opens quite substantially, or closes quite substantially higher. So almost 4 points. So I would look for a little bit of a pullback, a little bit of a retracement to get in. So say I retrace here, and we're looking for a risk on this trade is going to be 4.75. And 1.5 here. Yeah. Right, good. Okay, so we get stopped out here, negative 2.5. All right, so PD is going to be yeah, 2.5. Goes to 8.5. All right. And we have one win, one loss. Okay, so our next trade is going to be on October 9th here. So October 9th, $10.36 is our first trade. So we have 10.36 here, and our close above these three candles is relatively close, so we're going to keep it that way. So 6.25, we get stopped out here, 6.25. and I might be looking for a trade after this. So we get stopped out here at 11:33. I see the trend. I like the trend. So 12.12 will be our next trade. We get stopped here. 12.12 is our next trade. So where's 12.12? All right. Let me double check this. So we get stopped out here 11:33, and so our next trade is going to, our next signal will be 12.12, 10:09. All right. So around that much. All right. Yeah. So we'll do 8.5 here, 6.25 loss here. So $8.5 minus 6.25 plus plus 8.5 again. At 10.75. And our wins are going to be, we're going to add one win. So we had one win here. And then we're going to add another loss here too. So that makes sense, right? So we had one win, we had one loss, and we added a win, we added a loss. All right. Board. Okay, so October 10th. Our first signal after 10 a.m. 10 a.m. is right here. So our first signal after 10 a.m. is 10:12. And it's this massive candle here. No, it's not actually. 10:12. Yeah, I see why I use that. Okay, so we have our first signal here at 10:12. The market breaks out of the signal. It's creating its own signal there too as well. And so this is a very, very large move away from this original orb. So I take on the second orb. As the market breaks above this orb, I'm looking for a retracement into this large orb. Why am I using only the first 5 minutes of this orb? It's because this orb is gigantic. 55, 56 points. So I don't want to take the full extent of this move. I don't want to see where this move is going further. I want to use the volatility to my advantage. And I'm not really taking very large stops. I might take a midway stop only because it is very, very significant. And you can ruin your account this way by taking the full extent, taking a 55 point stop when you're used to taking 6 or 7 points. All right. So yeah, so we have a very large exit here. And we'll do 49. Yeah. Okay. I gotta move this keyboard closer. Okay, so 10.75 plus 49 is 59.75. All right. All right, it's 10/13, October 13. Well, 10 a.m. is too early, so I'll wait after the first 10 a.m. candle to close. So I'm not going to take a 10 a.m. candle. I'll wait for the 10 a.m. candle to close, because around that time we're still in volatile conditions, and 10 a.m. news can occur as well. So 10:54 is our first candle here. All right. So 10:54, we're doing the same thing. We mark out 10:54. We're looking at the first 3 candles, and we're going to create an orb around these 3 candles. We wait for the market to break out to those candles to create a close above or below those candles, and we're going to use a stop being the size of the box itself. So the stop is 10 points, quite a large stop, and we'll look to take profit at 15. So it's plus 15. So it's 74.75. All right. Yeah. Four wins, 2 losses. Okay, moving forward here. October 14th. We go here, October 14th. Microsoft and NVIDIA. $10 a.m. we started looking for signals around here. No signal, no signal, no signal. 11:36. So quite late in the day. So 11:36. Market's trending beautifully, right? We have a 17.75 stop. It's quite large. 17.75. And then we'll do 1.5 here. All right, so 26.75. All right, so PD equals 74.75 plus 26.75. Equals 101.5. All right. So our wins are going to be 5 wins and 2 losses. Okay. All right, on to the next one. So October 15th. Have I covered? Yeah. Okay, so October 15th. Our first entry is 1133, which we have it here. All right, so 1133, the box forms here. We get our first entry here. This is really not very far away from the entry, so we're just taking it right there. All right. $17.25. Okay. So 17.25 and 1.5 here gives us 26.25 points, right? So PD equals 101.5 plus 26.25. Is 127.75. 127.75. All right. Six wins, 2 losses. Okay. All right. And let me just cover these. Well, we'll start with this right now. So I wanted to cover corroborating assets. So fundamental analysis versus technical analysis. All right. So technical analysis, as you know by now, constitutes candles, patterns, support, resistance, structure, etc. And the thing is that for one to be a good trader, one needs to incorporate fundamental analysis as well. But what do you do when you trade futures? See, traditional fundamental analysis entails companies, therefore company reports, cash flows, earnings, valuation metrics, balance sheet, etc., etc. But index and metal futures have none of that. So how do we as futures traders incorporate fundamental analysis into the broader picture of taking trades? So we use volume, we use economic data, NFP, CPI, all these moves, cross market behavior, which is what we're doing here, is that we're looking at different markets and seeing how those markets can influence the market that we're using to trade. And of course, what I use specifically, which is volume on corroborating assets. And so to generate corroborating assets, we kind of have to look at the weights. So the weights of these indices, right? So so we'll do so in terms of the weights, NVIDIA is number 1, Microsoft is number 3. So we're placing, I have not found very good evidence on Apple. So I'm using Microsoft and NVIDIA because they're highly weighted. And so volume on these assets can influence the markets. And so it's a very simple idea. And it's the idea that does create, so it does create some sort of edge that I've noticed in these markets. All right. So that's how I use these things. All right. So yeah. So really it's just volume on the corroborating assets that we're using here. And we're kind of avoiding FOMC events and whatnot. Okay. So October 16th, We're going to look at October 16th. So 1021 is our first signal. And then 1157 is our next signal. Forward. Okay, so we get minus 14 here, and then 1157 being our next signal after that, right? So 1157 is our next signal on October 16th. And when the market breaks down here, it's a bit larger breakdown. We look for a little retracement. So say my entry is here. A 12-point stop. Let me take 1.5. Now you can't take more than 1.5, but I've seen that the market actually does kind of like to reject the beyond the 1.5 area, and we get bounce backs or retracements after that. So 18.25 points. So PD equals 127.75 minus 14 plus 18.25. It's 132. All right. And we're on what, 6 wins? So 7 wins, 3 losses. Okay. All right, October 17th, our first signal is at 1118. So 1118. We get a beautiful entry right outside the orb. 17.25. Plus 26.5. Is that right? 26.25. All right, equals 158. All right. All right, 52, 58. Yeah. All right. So we'll move on to October 20th. Our first signal on October 20th is 1021. Yeah. Yeah. bit of a large entry here. Sorry, a large move above the candle. We take a little bit of a retracement back. Our stop is 13.25. Yeah. And we're gonna hold this trade till 3 p.m. So at 3 p.m. or 3:03 p.m. we hold this trade too, so we get plus 14 out of it. All right. So 158. All right, let's move on to October 21st. Okay, early entry here at 10:09 on October 21st. So we have an entry here at 10:09. We look for a retracement. We get stopped out here. And then we get stopped out a second time. So 11:45 is the next one, right? Yep. All right, we get stopped out twice. So 8.25, 6.5. Minus 8.25. Minus 6.5. So 157.5. All right. Move on to the next day. All right, October 22nd. Our first entry, October 22nd, is 10:27. Okay. This is minus 15 straight off the bat. We got good trend here, so I'm looking to take another trade after it. So 11 a.m. So we're looking for another trade after 11 a.m. So 11 a.m. is here. So 11:21 is our next trade. So 11:21. No, actually, it doesn't give me entry here. Yeah, it does. All right, so 11:21, we take a trade here, and we get stopped out to the downside. Yeah, you don't actually have to take the second trade. You don't actually have to take a trade that's going the opposite way. But I'm just trying to be, as rigid as possible with this strategy. So if you see an orb, you take the orb. If you choose to take a second trade, we're just taking the orb breakout. But yes, with the market moving low, it's printing lower highs and printing lower lows. You might want to take a short on this position, especially on short side days, because short side days like to move down, and trying to catch a falling knife can hurt you sometimes, can hurt you many times. But in the interest of being honest with the strategy, we're just sticking with the rules of it. So $24. All right. Looks correct. Wins 9, losses 7. Okay, so October 23rd. October 23rd, 10:18 is our first entry. Okay. We see a nice breakout. We take maybe a little retracement here. Yeah. It's around 17 points. I'm not so strict when I actually take trades. But yeah, so around 17 points. And 25.75. All right. So PD equals 124 plus, was it 25.75? Is that right? 25.75 equals 149.75. 149.75. All right, so wins are 10 and 7 losses. All right, we're moving along here. October 24th. So again, October 24th, looking at Microsoft and NVIDIA, looking for signals, a volume spike after 10 a.m. And we get our first volume spike at 10:48. So 10:48's here. We get 3 bars. We create an orb outside the bar. And we're waiting for the market to give us a close. We do not take break evens. We're just waiting until 3 p.m. 3 p.m. or 3:03. We get 6.25 points. All right. $156, 156. Okay. Our wins are going to be 11, and losses are 7. Okay. October 27th. Yeah, so October 27th, we get really late entries. Here it's at 12:51, right at the edge of where I feel comfortable taking trades. So we'll take 12:51. And we see at 12:51, we get a very small but profitable trade to the downside. So it's 2-point stop. 2-point stop here. And we get 3 points out of it. All right, so PD. $156 plus 3 equals 159. Right. Wins 12, losses 7. Okay. October 28th, 11:33. Our first signal is actually 11:21. So 11:21. All right. So 11:21, we get very big move here. So I'm waiting for some kind of retracement, right? Is this correct? So October 28th, 11:20, yep, 11:21. All right. 4-point stop here. So we got stopped out here. Now we're looking for another trade. We're looking for another trade after this. Why? Because we have really volatile conditions here. I mean, the first 15 minutes, well, maybe not so volatile. October 28th. I mean, I'd like to try my hand on another trade. So we get one loss here. We take another trade here. After we start looking for signals after we take a loss, right? So 11:57 to 12 o'clock, we take our loss, and then we get a signal. We get a signal after our loss, 12 p.m. And our stop is going to be 4.75 points here. Okay, 7.25. So PD equals 159 minus 4 plus 7.25. All right. $162.25. All right, so the next day is FOMC, and so we're going to skip FOMC and we'll move on to the next. Okay. So October 30th, we get. So let's move on. Let's check out October 30th. $10.09, October 30th is our first entry, right? All right, so 10.09, 13 points. So we take a 13-point stop here. Okay. And we're looking for a trade after 10.39. So 10.39 is here. Our next trade is 11.15. So we have 11.15 trade there. All right. Short here. Probably around that much is fine. 1.5 here. All right. So around 11.5, 13. Okay. Is what? 162.25. Okay. Minus 13 plus 11.5. $160. Wins 14. Our first entry, October 31st, is 10.09. Again, yeah. We take a loss on this. Then our second entry is going to be what, 11.42? So our second entry is 11.42, yeah. October 31st, okay. Second entry, very nice. Both these entries are quite nice, right outside the orb. Closes right outside the orb. All right. So let's see, plus 29.25. Get 181.75. Is that correct? Oh yeah. All right. So wins are going to be 15. Losses are going to be 10. So losses 10. $11.03. $11.12. Yeah. Okay, another good entry here. So okay, we're looking at the orb carefully. So we got the 1, 2, 3 orb, the box, open above the box. It's an 8.5 stop, whatever, so close enough. 8.5. Well, we'll do 8.5 here. And yeah, so 13 points. All right. So PD equals 181. Plus 13. 194.75. 194.75. And do so 16 wins and 10 losses. $11.18 is our first signal here. So is that right? Yeah, $11.18 is our first signal here, which ends up being a loss around 8 points. And then we get a short here. And so we take that entry right there, we get stopped out here. And so we'll say that's around 8 points as well. So, well, 6.5. So no, I would take a 7-point stop on this. So 8-point stop here, 7-point stop there. So 15 points. So we'll just simplify these from now on. Yeah, so 195. BD equals 195. Minus 8 points plus 7 points equals, oh no, it's minus 8 minus 7, yeah. Minus 8 minus 7. It's 180. All right. So wins 16, losses 12. Right. Okay, November 5th. We have no trades till 1:48, November 5th, and that's way late because I'm looking to exit all my trades at 3 p.m. So it only gives me an hour and 15, an hour and 12 to make that decision. So I'm going to skip on this day. We'll move on to October 6th. October 6th, our first entry is at 10:33. So our first entry is at 10:33, and we have a tricky day actually. So we get in the first 10 minutes we get a 22-point move, and so because of that, I'm trying to take trades as soon as possible. As soon as this becomes my box, because 20 points is significant. It's quite significant. It's really higher than my average stop. So I'm really looking to try to get into entries early. Now, on this day, I could take the full box and get stopped out Or I could take the bottom of this candle here, or the top of this candle here, for trade. But let's just assume that take the top of the box here, 1.5. I'm looking for 1.5, and I get exited out at 3 o'clock. So I exit here at a negative 11 point stop loss. So PD equals 180 minus 11 equals 169. All right, so 169, and then wins are 16, and then losses are increasing as well, so 13. All right. Okay. And then November 7th. At 10:33 is our first entry. All right, 10:33. So we get 3 candles. We create the box. We get a candle outside the box. We get a close outside that. And it's very close to it. It's a very ideal entry. We take the trade. Our stop loss is going to be approximately 18 points. So yeah. And then 1.5, 27 points. So our PD is going to be 169 plus 27 equals 189, 196 points. All right. And our wins are now 17, losses 13. All right. Okay, moving on. November 10th, we have, well, let's see, November 10th. Ooh, we got trades very late. So 11:36 is a trade. That's not too late, but 11:36. Yeah. We get a break above here. We take that break. You know, you can accidentally skip this. You can, try to hold for a retracement and skip it. We're going to assume that we take it only because it's not that far from. Yeah, it's only 3.25 points away. So if you get a very large candle and the candle skips, you're going to lose that. You can't take that trade any longer. If it keeps on going, you'll have to find another entry. So 11:36, there's another entry here, 11:54. So, yeah. So 11:54 would be an entry here, and that's perfectly fine too. So let's actually just do that one. Say we skip this one, we'll do that one. All right. So 11:54 is this one. So the reason why is because say you skip this, there's no opportunity to take this trade again. So we're just going to say that we accidentally waited too long and we let this trade run away from us. And so we're just taking another trade here. And yeah, and so we're getting a retracement here. It's a very large stop, 15.5 points. Okay, so 15.5, and would take the trade here. Very small retracements, and then yeah, so 22.5. All right. So we'll do 23. So $169 plus 23 equals 189, 182, 192. Right? So 15.5 here. To be a 15.5 point stop. Yeah, so 23, close enough. All right, so 192. Okay, so November 11th. November 11th. What do we got going on November 11th? What do we have on this day? All right, so 11/11, 1033 is our first entry here. Okay. And we do get stopped out. This is a tricky stop out, actually. So we get stopped out here. Yeah. We'll just accept that. So we get a stop out here, and then our next after 1033, when's our stop? Our stop out occurs at 1033. Stop out occurs here at 1133, 1130. So 1148 would be our next entry. All right, so 1148. We get another entry, another good close above that entry, 6-point stop. We'll do 6.5 and yeah. All right, so 9 and 10. So we got a loss of 9, 10. So PD equals 192 minus 9 plus 10 is 193. Our wins are going to be 18 wins, and losses are going to be 14. All right. Okay, November 12th. November 12th. $10.57, November 12th. Okay, this is stop out here. This is a very large move. Is it? Oh yeah, 6-point move. So we're looking for some kind of retracement here. So we get a retracement here, a little bit of retracement, that's all. And when the market wants to give you a trade, it's going to give you the trade. So yeah, just a little bit of retracement. So we get 8.25. We get stopped out here. We get stopped out 11:27 to 11:30. So on November 12th, we're looking for a trade after that. So the next trade is 11:39. So next signal is 11:39. So 11:39 here. This is tricky. I typically don't take closes. Well, this is open, so it's not. Yeah. But yeah, what I was trying to say is I typically don't take very tiny, like if this was a red candle, if this was a bear candle, and it closed, I believe, immediately lower, I wouldn't close it on, I wouldn't take a trade immediately after the orb box is complete. So the next candle where the orb box is complete, I would not take that if this were a bear candle, but it's not a bear candle. So our first close is here. It's a very large stop. The market really doesn't do very much for the rest of the day. So 1, 2, 2 o'clock, and then we get to 3. So 3, we take a loss of, we'll say 5 points. We'll take a 5-point loss here, and we'll take an 8-point loss here. So $180. And our wins are 18, and our losses are steadily increasing, so 16 losses. All right. All right, November 13th, our first entry is 11:06 a.m. Yeah, so 11:06 a.m. we get a close here, some distance away from this. So I'm waiting for some kind of retracement. Even if I take a retracement here, which is probably what I would take, I'd probably take this retracement there. And we have a 9-point stop here. We get stopped out. So we get stopped out here on this candle, which is going to be sometime 12:03 to 12:06. And I'm waiting for the next entry after 12:06. So our next entry is here at 12:48. 12:48, and then we get an orb here. We get a breakdown on that orb. Close. Looking for 7.75, 1.5. So 12.25 and -9. So -9 plus 12. So our wins, 19 wins, losses, 17 losses. Okay. On November 14th. $11.48, November 14th. Yeah. So this is really nice. The market's breaking, is moving higher and higher and higher. It's a great trend, but we never get any trades on this trend, and then we lose on this one. And because our loss occurs kind of late in the day, it occurs here near 1 p.m. I'm not really interested in taking other trades after. It's because this is a grind. It's a grind higher, and then you lose on a long. And I really don't like that. Maybe there's an opportunity if you're getting an entry on a pullback, which maybe we don't. So 11.14. So I guess there's a trade here at 112. But yeah, 112 is not even a 112 is on a it's It's moving higher here. So, all right. So we're just going to take one trade on this day, mostly because of the grind, mostly because it's a grind higher, and we're already kind of overextended. The market's moved quite substantially from the low to the high. We're already up 113 points on ES, and that is to me an overextended move. So I'm not really looking, because in my experience, the market moves 40, 50 points on ES in a day. 60, 70 points is a big deal. So 113 points is overextended for me. So we'll just take we'll say minus 16 here. So, $167. Yeah. All right, let's move on to November 17th. At 12 p.m. is our first entry. Yeah. It is also a late entry here as well. But entries prior to 1 p.m. I'm comfortable with taking. All right, so our first breakdown here is right there. So we'll just take this one. So it's about 10-point stop here. So all right, 14.5. We'll say 15. Yeah. Yeah, we'll just say 15. Yeah. So PD equals 167. All right, November 18th. $10.36, November 18th. Well, we got to stop out here, 11:09. So our next entry is 11:36. Now we get a good trade here, 11:36. So our stop out's going to be around 17 points, and then this is going to be around 22. So okay, we're at 40. We're at 40 trades. We'll do 10 more. We'll do 10 more, and we'll have some good evidence here. 1148. So we have 1148. We got to stop out here, and then we have another trade here. $12.03. Is it 12.03? 12.12. $11.48, $12.03, $12.12. Yeah. Let's see what 12.03. What we have. Okay. It's practically the same thing. Yeah. Well, let's just use the all right. So we're getting stopped out on this. So we're getting stopped out here, 11.5. And we get stopped out here. It's a bit nasty. 18.75. Yeah. So do 19 and 12. Yeah. All right. Finally 50%. All right. Oof. That's a difficult one. All right. So November 20th. $11.57. Yeah, $11.57 be our entry here. Yeah, it's real tricky. So this is it's a 30-point stop here, and we get a breakdown on this. And here's the thing: is that it's really, if you wait for it to retrace, you get a better entry. So we can do that, or we can do it this way. But yeah, so if you wait for the retracement here, mostly because it's quite significant a move here. So 7.5 moves, 7.5 points to the downside is where the candle closes outside the orb box, and then the market retraces here. You get a great entry here as you take it on the close of the next candle, and you get 1.5 very easily. And I'm going to take it only because this is the appropriate decision that you should make, is that it's a large move outside the candle. You wait for the retracement, candle retracement. You wait for the close of that candle, and then you take that trade. So 1.5 here. However, if you do that, it is fine to lose. This is not a bad strategy at all, but we're going to accept this. This is the appropriate method of trading. So 45 points here. All right. What is there? Wins 22, losses 21. Okay, moving along. November 21st. November 21st, 10 o'clock here. After 10 o'clock, we have 10:15. And then we have 10:33. Okay, so we have 10:15. We get a close here. We get stopped out. We get stopped out at 10:48. So post 10:48, our next entry is at 11:03. All right, so 11:03, we get a close here. Okay. Wow, it's a very large stop here. Okay, so this is a 25-point orb box. Quite a volatile conditions here. 22-point orb box. 23, so we'll do 23 points here. So we do 23-point stop here. And then this box, which is the most recent box formed following our stop loss getting hit. So our stop loss gets hit. We're looking for a new signal only after that. We get a signal here, we get a box here, and we get a 24-point box here. And so 24 points, it gives us around 36. So 23 and 36. So PD equals 201 minus 23 plus 36 equals 214. And wins 23. 23 wins, losses 22. Okay. Is that right? 13 points, yeah. So oof. A couple losses here. So November 24th, our first trade is here at 11:03. 11:03. So you get a loss at 8.5 because the box is 8.5. Right? Or 9, whatever. So 9. And then we get another trade here. So 11:36 is where we get stopped out. So just waiting. On 12:39 is our next trade. 12:39 is our next trade, correct? And then we get stopped again. So we get stopped out 7 points here, 9 points here. So 214. So 214 minus 9 minus 7 equals 198. Right. Wins are 20. Is it 23? So 23 wins here. Losses are going to be 23 as well. Oh, 24. Losses are 24. 2 losses. Okay. And November 25th. 1003 is our first trade here. Yeah. All right, so 1003 is our first trade here, marked correctly, orb box. We get a break above the orb box. 30 points. So yeah, whatever. So 45, we get a 45 point target hit, quite substantial. All right, so PD equals 198 plus 45 equals 243. Right, 243. Wins are going to be 24 wins, losses 24 losses. Very nice. All right, and wow, only a couple more trade. Okay, so we get this kind of grindy price action, very tiny moves in the market. We're looking at, you know, an orb, very small orb. So orb, well, this is not very small. It's only 9. This is 9 points. But we take a stop loss here. November 26th. So we're looking after 10 a.m. 10 a.m. November 26th. Our first entry is 1203. 1203 is kind of late. 1203 is kind of late. And we get a signal at 109. So we're looking at a 10-point loss here. So, well, it's 9. So 9-point loss. We're looking at 9-point loss here, 9-point loss at 124. I'm not looking to take any trades on that day. After that, because it's a bit late. We close all our trades around 3 p.m. Therefore, not much room for the market to advance. So, PD equals 243 minus 9 equals 244. Wins 24 wins, losses 25 losses. Okay, one more trade. And for our last trade on December 1st, we're gonna go December 1st, looking for our alerts. So that's how my alerts signal, actually. So they're just sound alerts. So I hear a signal, I look at the computer, I draw the orb, I wait for the orb to cross, I wait for a close outside the orb, and then I take trades. It's quite simple. Quite simple. All right, so 10:30 is our first signal after 10 a.m. on December the 1st, so 10:30. Right, so we have 10:30. We get an orb here. Why am I drawing the orb like this? So the orb, oh yeah, it's 3 candles. Yeah, so we got 1, 2, 3 candles. Orb opens, we get close here. 11.5, 17.25 points. So 17 points. All right. So our PD equals 244 plus 17 equals 261. Right? 244. Yeah, 261. And our wins are going to be 25 and our losses are 25. Okay, there you have it. We done 50 trades and our win rate is exactly 50%. You might not get exactly 50% because there are days where both sides will lose, and because both sides of an orb, on a day where both sides of an orb lose, you kind of it brings your rate down significantly. So it brings your rate down a little bit. So 50% is an ideal setup. I think overall it's around 47-46%. So, but yeah, there you have it. and feel free to use it. We made 261 points throughout the whole strategy, and yeah. All right. Thank you. Thank you very much for listening.